So there are many laws that affect payroll. There is the Federal Labor Standards Act. There is FICA, the Federal Insurance Contribution Act. There are income tax withholding laws through both the federal, state, and often the local level. There are unemployment tax acts, fair employment laws, and other federal laws. So a whole bunch of laws all working together. You'll even see state minimum wage and maximum hour laws all affecting payroll. So payroll is a bigger deal than a lot of people realize. Let's look at the Fair Labor Standards Act. This affects our minimum wage. Currently it's $7.25 an hour. This is an equal pay for equal work provision. If you had two people doing the same job, they should receive equal pay regardless of gender, ethnicity, religion, all of that. This also sets laws for companies involved in interstate commerce, and it has stipulations as to how payroll records are to be maintained. FICA is comprised of two taxes. FICA is paid both by the employer and the employee. You'll see the OASDI, the Old Age and Survivors Trust Fund. Doesn't that sound pretty? And then the HI, which is the Health Insurance Plan. And we're going to learn a lot about how to calculate those different withholdings. Sometimes companies get in a little bit of trouble because they don't withhold the right amount, or they withhold the right amount but they don't withhold, or they don't plan for their own contributions. So when you get a paycheck, next time you take a closer look at it, you'll actually see that FICA was withheld from your paycheck. So maybe you were going to get $1,000, there was a percentage that was withheld from FICA. That's why you don't walk home with $1,000 at the end of the day. You walk home with $300, right? So if you're a business, you have to withhold on behalf of the employee, and then you also have to match that as an employer. When the quarter or the end of the year runs around, if you don't have that money, you could get in some trouble. So different file dates for different amounts that you withhold. Right now, I think it's $2,500. If you have withheld more than $2,500, you pay every month. If you have a very small business with very low payroll, you might be able to pay that every quarter. But that's the withholding, which you had owed the employee, plus your contribution. And it can add up quick. So I think that a lot of small businesses have difficulty with this if they have not earmarked it and planned ahead. So this is definitely something that can help you if you have a business. There is the federal income tax, and this is levied on the earnings of employees, and it's withheld from the paychecks. I guess the federal government decided that they didn't want to wait till the end of the year for you to pay all of the income tax on everything that you've earned. They needed a money stream throughout the year, so they take a little piece of each paycheck. And so does the state and many local governments as well. A lot of local governments in rural areas don't tax on income. They tax on property values, usually a home, boats, cars. Based on the value of the things that you own, they issue a tax for your municipality, maybe for your city or your county. But they don't usually tax for your income. But some areas do, some cities do. And income tax is also withheld from your paychecks. The amount's different in each state. Some states have no income tax at all. So a lot of times you'll see people living on the border between two states, working in one and living in the other. Some states that don't have income tax are Alaska, Florida, Nevada, South Dakota, Texas, Washington, Wyoming, New Hampshire, and Tennessee. So kind of keep that in mind when you're looking to relocate. Federal Unemployment Tax Act, or FUTA, whatever you want to call it. This is an employer tax, and it's paid on the first $7,000 of your paycheck. At the beginning of the year, you will actually take home a little less than you do at the end of the year. And that's because the first $7,000 that you earn has a federal unemployment tax tagged onto it. This isn't used to pay unemployment benefits. This is used to pay administrative expenses. So, the government, they need lots of administrative expenses. Then we have SUTA, the State Unemployment Tax Act, and this is unemployment insurance that each state has. This is where North Carolina gets into a little bit of trouble, because if you have a high level of unemployment, you're not going to be collecting as much unemployment tax. And then, so if you can picture the economy crashing slowly, painfully, unemployment rates are rising, we enter into a big recession, and all of a sudden, the little budget that North Carolina had for unemployment is depleted. So what does North Carolina do? They decide they're going to double the taxes on all the businesses to make up for it. And it received a lot of heat and a lot of controversy and a lot of angry small business owners who now had to double the amount of SUTA that they were withholding and paying. But that was to replenish the coffers when we had a high unemployment rate in the state. So your individual SUTA withholding for your business is determined on the amount of seasonal employees and the amount of turnover you have. So unfortunately, a lot of businesses in the restaurant industry or in the beach shops in Carteret County or anywhere that there's a tourist impact, they usually have to pay a higher level of unemployment tax than someplace that has longevity in their employees. In many mid and large-sized companies, the human resource system sets all the procedures and methods for the recruiting, hiring, orienting, and firing of employees. There is a lot of record keeping that is embodied in the HR system. And big part of this is the application for employment that is completed by the person seeking employment. So if you're applying for a job, there's no law that prohibits questions about your religion, gender, national origin, or age. But if some of those sensitive questions are asked, they have to be justified. So they have to tie into the ability to perform a job. So if you are going to be working for a religious organization, say a church or a religious school, they would have the right to ask you about your religious beliefs. If you are applying for a job where you may have a lot of interaction with bilingual people, they have a right as a potential employer to ask you if you speak more than one language. But they are not allowed to ask you those questions if they don't tie into your job, your potential job, if they don't enhance your ability to perform that job. Otherwise, it would be considered discrimination. Aptitude testing, which is kind of what you all went through when you decided if you had to take certain math or English classes when you got here. If you were applying for a job, you don't have to take those. It's only legal if it's related to job performance. You also can't issue lie detector tests to potential employees. I'm sure that would make some interesting interviews, but you're not allowed to do that. And you're not allowed to drug test in certain states. I know in North Carolina you're allowed to drug test if it's related to your job. So if you're going to be a school bus driver or truck driver or something where you could cause bodily harm if you were impaired, most of those jobs allow you to drug test your potential employees. Preparing a very comprehensive job description protects companies from discrimination charges. If you have all of that written in stone that you're allowed to drug test and ask about questions of religion, then it prevents you from looking like you discriminated some point during the selection process. There's a lot of litigation in this area of hiring, firing. So if an employee is leaving the company and they put you down as a past employer, and the new employer is looking at this employee and calls you and says, was Joe a good employee? You have to be very limited with what you say. You can really only verify facts. Yes, Joe earned this amount of money. He worked for us for 9 months. That's pretty much what you can do. Unless there was some legal action that took place, you can't enhance much beyond that. If you start saying that Joe was really lazy, he didn't do his job, he was always late, unless it was a fact that was documented in his reports, you really can't talk about that, or you could get sued. Because of that, those references are really not that valuable because people are so afraid of getting sued that they're pretty restrictive with any really useful information. When you're hiring a new person, there's hiring notices, and that alerts the payroll department to a new employee. So then the new employee has a history record that contains all of these evaluations, what the compensation is. For example, North Carolina issued a 1% increase to the salary of all state and community college employees recently. That was something that our state approved. So I recently got a new contract that enhanced that 1% raise. That all went through the payroll department, and I had to sign a new contract, and that went into my employee file. If I had any disciplinary issues, performance appraisals, things, that would all go into my employee history file. It's important to keep good care of those files, because if I were ever to sue or something like that, documentation is always going to protect the business. It's going to protect you. Depending on your size of your company, a payroll accountant is really going to have a heavy role in this. If you have a very small company, oftentimes the payroll accountant is going to be the sole record person. So it's really important that you're responsible for these records, that you maintain their confidentiality and impartiality. The payroll accounting system, getting back to the money side, all procedures and methods that are related to the disbursement of pay to employees and documentation. You'll see these things called the payroll register, and that's basically just each payroll period is all the employee data. So say we pay our employees twice a month. On that payroll period, you're going to see the register that includes the payroll all the employees, the amount of their payroll for that month or those 2 weeks, the actual dates for those 2 weeks, the amount of withholdings, and the amount that they get to take home, and how it was distributed. Was it direct deposited, or was it given to them in form of a check? The employee earnings record, that's an employee-based record, and it outlines the earnings per period, so maybe per payroll period, per quarter. Quarters are important from a payroll perspective, because that's usually when you have to file some forms, and per year, year to date. So as of October, this employee has earned XYZ amount of money, and this other employees earned this much. And you also need to record the amount that's paid, whether it's paid by check, card, or direct deposit. I don't know very many people who pay by card. Check and direct deposit is definitely the norm. Some small and mid-sized businesses hire a payroll company to do their processing. This is kind of pricey. Some less expensive options are like Intuit, which is related to QuickBooks. They have a more self-reliant option where they withhold, or they help you calculate the withholdings for your employees for each pay period, but you're still responsible for figuring it out for the end of the year. You could pay more, and they'll do different pieces for you. You can also have an independent company that does every part of bookkeeping for you. So it depends on how much you're willing to pay. If you are a small business, and you can do it on your own, you're going to save yourself a lot of money. So I hope this class helps you learn how to do that. So you not only stay out of trouble with the IRS, but you save yourself some money too. Thanks.